All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open for almost an hour, still have a couple minutes to go here, but really kind of a bullish open. In terms of how things have played out in the market, I mentioned in my comments this morning that yesterday at the close we saw something really interesting. We saw the market dip. And here, let me kind of just zoom in here on S&P futures from yesterday. Here we go, right here. In the last hour, we saw market futures dip, and they fell about 8 points here into the close. But something interesting happened while that was going on, and that was we didn't see the VIX make much of a rally. Right, the VIX itself. Let me kind of come in. The VIX itself really kind of stayed pretty stable, and we hadn't seen that. That is something we hadn't seen in the market, or in the market for the last several weeks. And a lot of times that's just that when you start to see it, okay, what things are getting a little more bullish, right? It's not an all clear signal or anything like that, but it's one of those where you kind of look and you say, okay, things may be a little bit a little bit more bullish for the short term here. And we saw that yesterday, and we're getting some upside follow through here today. With the overall market. If we back this out to a 1 hour chart, you can kind of see what this looks like, right? In fact, let me get the drawings off of here. Remove drawings. There we go. Remove. There we go. I know I don't pronounce drawings correctly. Sorry about that. If we just slap a retracement here on the drop that the market's had, right? We came up to the 32% retracement yesterday and then kind of sold off a little overnight. Now we're pushing up to the 50%. The full retracement is right up here around 2,900. And this is kind of this is going to be the key battle line. This is going to be a major battle line right here. And I would be surprised if we see the market blow right on through it. I would be surprised if we hit it and drop hard. What I'm expecting is we kind of climb up to it and manage to mosey around it for a few days, if not longer. So that's kind of my expectation. Will it play out? Yeah, obviously we'll see. But anyway, here we are. We're past the time limit entry triggers. There's no new entry triggers. There could be up to 8 different triggers by the end of the day here today, and I'll show you kind of what is very close and what is there, but none right here as it sits this morning. But this is probably the most jam-packed morning with potential triggers that I've seen since we've started going live on Trader Minute with the challenge format here. So nothing to do there. Trade-wise, Procter and Gamble. Right, we're in some Procter and Gamble. Stock profit level 108.38. Right now, the stock is at 108.06, 108.09. So it's about 30 cents away from its profit level. Could I go and do something with this? I could, right? I could go and make a change, but it's not my decision to make, right? The challenge is, the elements of the challenge have been automated, right? The decision-making process has been automated here. And, it's something where that automation has been tested. Not my kind of let's go in and tinker here and there. And so you won't see me do that. I do reserve the right to do that, right? If you kind of look while all trade entries and exits follow the algorithm, Jeff can step in under unusual circumstances and change a trade. But let's face it, Procter & Gamble, there's nothing unusual about this circumstance, right? This is let me get to the chart here. If we just pull up the chart, there's nothing unusual going on, right? We got the trend signal back a few days ago. Yeah, dinked around for a few days. Yep, pushing into a new high here. And okay, great, right? Great. and that's ultimately what we want. And if it does hit that target, we'll go out and pull 40% off before the close of the market here today, which would be about $850 kind of stripped out of the trade there, which would give us enough cash to go out and make another trade, which is very very appealing, right? But we'll see how that plays out. JD here, let's go take a look at it. Let's go down here to the option. The option's worth 223. So let's come in and set that in here. So 223 is the option price there. So we're looking at about, we're looking at a stock price here on JD that is 3034. So, not at the profit level, not at the stop level, not at the auto exit date. And so nothing to do there with that. Tomorrow afternoon is the auto exit date for JD. We have passed the auto exit date for Procter & Gamble to get out if the option's red. But right now the option's green, so still riding it. Tomorrow afternoon, if the stock isn't above its profit level to make an adjustment, then we would have to exit there at that time. Okay. But the thing I need to emphasize, you've heard me emphasize it a few times, I'll continue to emphasize it as we go forward, because it is a different type of approach here, is the decision making isn't in my hands. This isn't something where, where you can go, well, Jeff, should we take it here? Should we take it there? Feel free to take things, and cash out of things you're not comfortable with, gain or loss or any of that. But those decisions with this have been taken out of my hands, right? And the reality is this algorithm is me in terms of my trading. It has my trading mechanics, the things that historically I've liked to see, the risk management with the challenge that historically I've done. It has all that in there. It just doesn't have the constant decision making, the every minute of every day. What do you do about this? What do we do about that? What do we do? It takes all that out, and I found that to be very important. And it's one of the reasons why I spent so long working on this and making sure that it was viable. Is to just kind of be able to give the community a much more relaxed type feeling, an ability to know, okay, trades are only going to come 2 times a day. This isn't a constant all day making a decision, having to stare at the minute chart of my stock type of a thing, and just really to kind of be able to push the challenge back to what its beauty is. And, as we, as things change, as, there are dips and rips and things like that in the challenge, right? Different people's emotions do different things. But the decision-making process, that's the part that has to be consistent. And that is what the algorithm and that is what the, this trade challenge is all about here. Okay. All right. Before we move on from those, just a quick word here as far as JD is concerned. Because JD Open, it was down about 50 cents. I got a request to kind of speak to that and what that means. And let's face it, if we go to an hourly chart on JD, the gap below the 7-hour this morning, that's something that I don't like to see. And in the short run, that's something I like to just jump out and move on, right? But that has nothing to do with the algorithm. That has nothing to do with the challenge at all, right? So, there is no exit. Yep, sold off a little. It was down 50 cents. Now it's rallied on back a little. Could come back to the lows. Could go up to 31.5. There are a million different variables and a million different things that it could do. But let's face it. Go take a look at Procter & Gamble, right? I got into Procter & Gamble right here, and an hour later, the next morning, Procter & Gamble's down $1, right? Breaking below the 7. rallies on back and then sells off into the close on what was that, on Monday, sells off hard into the close, and oh no, man, market's up big, Procter just sold off into the close. What does that mean? Well, the algorithm said it means nothing, right? And that's a big piece of the algorithm, is to take out the noise. And yes, there's risk associated, and yes, ultimately things could get stopped out, and those are going to happen. But it's one of those things where, inside those price parameters, like what we see with JD, there's just noise right now. It's just noise, and that's it. That's all I'm going to look at it as. If I had a 2-week option, right, would the noise feel a lot more intense? Yeah, it would feel incredibly more intense, and it would be, would be something that creates significantly greater levels of, kind of community emotion, and kind of microscopic looking at. And let's face it, we went out, we did the test. I got with the test that we did, in March, April. I was able to kind of show what I wanted, right? That, yeah, the viability of short-term options just doesn't exist when it comes to the challenge format. And yes, there's a time and a place for them, and yes, it's one of those things that can be fun, but a couple wrong ones in a row and bye-bye, right? Whereas, with the ones we're playing with this challenge, there's a lot greater margin for error, and you can have a few go wrong without train wrecking the challenge, and you can still get the upside. And granted, if Procter & Gamble were a shorter term option and we were still in, yeah, there would be a little bit more of a gain, but not enough. Not that much. It wouldn't be all that significant when it comes down to it. So, anyway, enough about the challenge. Some stocks that are on the challenge watch list that are doing some things a little bit more game changing here today. Let's go take a look at them. 391s, stocks that are changing this kind of 391 mode, and this is something that I'll continue to show because I find this to be very important. We see things move up above on the stochastics 39.1. We see them move above 50. It's generally a good indication that the stock is changing its stripes. Now, there can be whipsaws, right? But we saw it. We're here with Chevron on the gap down. That tells us what? That tells us, hey, you know what? Upside signals probably aren't going to work all that well. Yeah, you can go bottom pick, but upside trend signals, no. Downside trend signals, a little more likely to work. Okay? And so we have stocks today like Chevron who are just changing their stripes a little bit. What are they saying? They're saying, look, upside signals are more likely to work than downside signals when it comes to trend. We see JD. This one moved above 50 yesterday, right? It was just below 50 when we got in for the challenge, but most challenge trades you're going to see they have to be above 50 for calls and below 50 for puts. But sometimes it can be close because this isn't actually used in the algorithm, but it's kind of the best visual display. But we see JD has changed, AT&T changed in terms of that 391. Twilio changed here in terms of that 391. Talk about a bear trap with Twilio. Breaks down and then pop, pop, pop. Big money coming in. I think if you want to make a bullish case on the market, right, then you can go look at a few things, but you want to make a bullish case on the market, I don't think you have to go any further than to show the chart on Twilio and say, look, Twilio is hitting a new high here today. There is nothing more bullish. You look at the type of company that Twilio is, and kind of the revenue growth type of company here. There's nothing more signifying of a bullish market appetite than seeing money flow into Twilio. So we have some 391 changes there. Now we have a lot of stocks with bullish 3-7 crossovers this morning. Here's Amazon. You can see Amazon has had this kind of little whipsaw below on the 391, right? Last time we saw that, we saw Amazon take a really nice move on up. Amazon could very easily be a bullish trigger here by the end of the day. And the only reason it wasn't here this morning is just the magnitude of change was outsized for the last kind of 24 hours of trading there for it. But by this afternoon, that could be changed here. We're seeing things like Arconic with a 3-7 crossover. And what do I mean? The 3-day moving average is pushing up above the 7-day moving average. All right. You'll notice the 391, this thing never dipped below 50. This has kind of been well above 50 and going. Amazing to see the divergence that we have seen between Alcoa and Arconic, and that continues. So Arconic could be a bull signal by the end of the day. Bristol Myers, this is one that would trigger here this morning. Had the magnitude of change in the last 24 hours not been so great, but by this afternoon that could be different. Honeywell. You can see the 3-7 crossover. This is one that if it's able to close above that 20-day moving average, very likely to be a bullish trigger. Microsoft, similar thing to Amazon, similar thing to Bristol Myers, would be a bullish trigger, but that move over the last 24 hours is just a little too great there for it. Nike, same element, only you see the 391 still below 50. Right, but that 3-7 crossover, Valero with a bullish 3-7 crossover, Verizon with a bullish 3-7 crossover, and Walmart with a bullish 3-7 crossover off of their earnings here today. The watch list has a lot of stocks with 3-7 crossovers, and as we get into the close today, I would not be surprised to see a bull signal on Honeywell, Bristol Myers, Amazon, kind of Arconic, all come into play here at the same time, which will lead for some very interesting decision making when it comes down to it. So anyway, that's what we're seeing out there. Look, there's still a lot of stocks on the watch list, like an Apple, right? Where we saw it change its stripes, push below 50, and yeah, Apple's rallying a little bit, right? But nowhere near in the same way that something like a Twilio or a Procter & Gamble or a Microsoft or even a Bristol Myers is rallying. And so a lot of these stocks that have changed their stripes and have kind of bearish stripes on them with the 391, they're still kind of in that area. Something like a FedEx, this is an oversold kind of relief rally bounce, not a brand new bull market emerging type of a bounce here with it. So anyway, that's what we're seeing with a lot of the stocks in the watch list. Do want to go out and talk about Devon Energy. Devon Energy is not on the challenge watch list, but yesterday I was asked if there was an energy stock that I was bullish on, that I thought could be, really good. Because you've heard me talk bearish about, things like Transocean, and bearish about things like Noble Energy, and even Halliburton and Schlumberger to a differing degree there. And my opinions aren't very high on those. I think there's some real structural issues that could come into play. Bullish, Devon, I think Chevron's one to be very nice to be bullish on, right? A longer term. They're going to be able to weather anything. And they are ultimately, when we see what's going on out there, they're ultimately the best way for investors to kind of get broad-based exposure. A little more risky type of play is Devon Energy, DVN. And this is one that you used to be able to categorize in that Halliburton, Schlumberger area, but they've transformed a little bit. They have some more just kind of pure production value here with them. But this is one that I'm a little more bullish on. I think has significantly more upside. It also has a chart very different than Halliburton or Schlumberger, and a lot of the other energy names: higher lows, higher highs. Right, coming down to the low end of the channel, pushing on up today. Nice little 3-7 crossover. I mean, to buy Devon here today with a stop at 31, that's a nice trade setup, right? That's a really nice trade setup. If you want to be a little looser on the stop, just use 30 and run with it. And that's one of the areas where I look and I say I'm much more bullish potential in that type of a stock than some of the others that are out there. I think you could lump EOG Resources in this category, albeit it's not as nice of a chart. Anadarko, they're getting bought out, right? So that's kind of done. Here's Oxy, which has dipped, and when this whole buyout is done, I do believe Oxy's going to see some rally with it. But it still needs that basing out process to happen. They way overbid, they're way overpaid, and energy companies are notorious for doing it, but they're also notorious for it not paying off. It generally bites them in the butt, and so that's what investors are kind of looking at. They're kind of saying, "Oh man, here we go again, right? Here we go again. I don't really want to be involved," and you can't blame them. If you're an Oxy shareholder right now, are you real happy? No, you're not, and it just seems like management was willing to go after Anadarko without any real concern about cost. Just, we want it, we're getting it, and no matter what, it's ours. And so, that has helped to push them on down. Ultimately, I do think they'll base out. Ultimately, I do think it's a good company and some better fundamentals than many of the others. And Anadarko may add to those fundamentals, but it's going to be a little longer, a little more, time change there than something like a Devon Energy or a Chevron or something like that. Okay. Alrighty. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.